Hey everybody, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. We're going to be talking about, big orders hitting the markets, okay, and sort of its importance and how to use it in your analysis, or as you'll see, not use it. But before I jump in, if you've been enjoying my videos, be sure to subscribe to the channel. Click that notification bell so you don't miss any new uploads. And if you find today's video helpful, be sure you hit that like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback. And, I love going through your comments, especially the positive ones. It sort of gives me motivation to keep putting out videos just like this. So your support really does go a long way. All right, so let's go ahead and talk about today's topic. Now, S&Ps, it's about lunchtime right now. What is it? It's September 26th. It's Tuesday. It's just right at lunchtime. And, since the cash open, all right, here, okay, this red line is the low of the day. We opened up in the cash session right around the lows, and then we just kept selling off. Now we got a little bit of a bounce here after this 920 low, where we traded down to 43.25, and then we have a big order coming through the market. Okay, all right, you can see here, market was 28, basically, 28 and a quarter. Then it jumps from 28 and a quarter all the way up to 30. And there's a big sweep going through the market. How do I know that this is a market sweep? It's because there's no counter trade, right? S&Ps trade, contracts every split second. And someone just came in here and swept through the order book. They just basically put in order to buy, about 2,500 up to 43.30. How do I know it's about 2,500? Because this is 133, 113, 140, 130, 144. You add all this up, you get about 1,200, even plus the 233, and I see another 1,200 sitting on the bid here. So that's about 2,500. Now all the guys that are trading on a dome, trading on a heat map or something like that, a book map, they're looking at that. They see that big aggressive order come through. They have a tendency to want to sort of jump in front of it, right? Because, hey, if there's a big trader coming in the market, that means something, right? So, okay, yeah, if I could go alongside of him, it's sort of like, the great white shark in the ocean, right? The big trader is the great white shark, the guy that bought 2,500, and all the guys trading on their dome and the heat map, they're sort of like those, you've seen the pictures, right, of the shark, and there's those little fish swimming around because they're picking up the scraps. Those are the people jumping right ahead of them at 30 and a quarter. Okay, so let's just mark this area on our chart here. Okay, so just mark that area, 43.30. Well, what was interesting is there was a zero follow through. Market didn't go any higher than this bar, and in fact, in the next bar, we trade back down into where the sweep took place from. And then again, over the next 1, 2, 3, 4, 5 bars, we literally cover that whole area of the sweep, right? And then we went back up. We sort of reversed and went back all the way up to 35. Now, when I see a big order coming through the market like this, what I'm expecting is if it's sort of, I don't want to say real money or something like that, because it's a gigantic order. It's 2,500. It just happened just like that. I'm really looking for this market to make its move quickly. Then when we get up here to 35, you can see the volumes on the offer: 900, 1,100, 1,300. Now this is where it gets interesting. This was about 2,500 bought at 30. It's about 2,500 sold at 35. Is it the same guy? I don't know. Maybe not. I don't know. I mean, hey, if you could pull off, what is that? 5 points. This is E-minis. What is that? $250 times 2,500 contracts. That's 625,000 in about 10 minutes. Now, again, I don't know if that's the same guy or not. Okay, but I just found the volume interesting. But what to me is the takeaway is, I get this strong volume in here. I'm looking for this move to happen, right? Not sort of trade back all the way back into it, and then get sort of this half-hearted move up to 35, where it sort of runs into some size. Now, when it's got up here to 35, okay, so this could be a potential resistance area. Forget about what happened here for a second, right? If you're coming up into sort of a swing high and you see some heavy volume come in, maybe, potentially, this could act as resistance. Okay, the next bar, we're staying below it for the most part for the next 5-6 minutes. Then we start trading above it. Well, this is where it's interesting. If we're trading on the other side of this 35 area, that's not a good sign of this being resistance, in the sense that just as here, right, if I was looking at this as being support, trading below it is not a good sign. And more importantly, you don't see that trader, that buyer, still in here, or traders rather, still in here supporting this market. So even though you got some big size here, it's done, right? It's not supporting that market anymore. Just as up here, it's not offering resistance anymore, right? And this is what I talk about, with the information that comes from the order flow. You want to take advantage of it as soon as possible, right? So for example, here, right, okay, I got some strong sellers in here, right? Ran into potential resistance, starts trading down. Okay, good. It's moving in my direction. If you get short, then you just go sideways, 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 sideways. That's not a good, effective trade. That's your sign. Maybe you should get out of it because it's not moving in the direction that you want, right? And then eventually it comes back up to that area of that heavy volume, which technically should be resistance. And it's trading here. You don't see that resistance. You just see sort of normal order flow volumes going through here. And then we rally another 7-8 points before we start coming back down. Okay. Then we get back down. Now, this is not a new low. Our low of the day was 25.25. Then we sort of come back in to this 35 area. Remember, 35, we had the strong seller there. Now we got, what do we got here, right? We get all the way down to 32, and a big buy comes through here. Another big sweep comes through the market, right? And again, this is, for about 2,500 contracts. Okay, next bar, trading above it. Great, that's what you like to see. I don't need to move my line because it's still at that same level, 35. Next bar, still green, but it's not going anywhere. It's inside of this green bar here. Then a red bar comes in here, trades down to 35, gets through it. Where is my strong buyer? It's not there anymore. If I know my strong buyer is not there anymore, and we could get through this area, what do I think is going to happen? We're probably going to keep selling off, just as if I have a strong seller here, we sell off a little bit. I mean, it's not a big sell-off. It's about 4 points. Then we come back up to that area at 35, and I don't have this strong seller here anymore. What do I think is going to happen? Do I think the market's going to sell off? No. This strong seller is removed from the market. So if I know that where I had supply earlier is removed from the market, I'm going to look for the market to go higher, which it did. It went up another 8 points. Okay, now, remember, don't forget about this one here at 30. Okay, so we get back down to 30. Is there some strong support in here? Right? Because remember earlier, now again, I don't want to say this is support because we spent a lot of time underneath it, but technically it did pull back to where that strong aggressive buying started down here at 28.5. If anything, maybe 28.5, sort of be the low end, if you would, where that sweep sort of started. Okay, if that. But it comes down, it tests that area, it gets down to 28.25. Again, the first time. But you're not seeing the strong buying that you saw earlier, right? I mean, they did trade back down to 28, and it did go up to 32. But, or from 30 rather up to 32.5. And then later it pulls back down into 28.5, and then it just sort of hangs around. I'm not seeing some strong support necessarily coming in, and eventually it breaks down, gets down, closes on the other side of that area, and heads down to new lows. Okay, now this time we get down to this new low at 21.75. Again, another sweep came in. This time it's not as powerful as these earlier sweeps. It's 100, 200, 300, 400, 500, 600, 700, 800. So maybe about 1,000, between 22.5 and, we'll call it 24.5 right up in here. Okay. Now, obviously it's a stacked buying imbalance, but, if you just sort of draw your line, I don't know, somewhere in here. Okay. Next bar, we trade down into that. Then we trade sort of back up into that 28.5 to 30 area. Again, not quite getting through, but you're not necessarily seeing strong buying. People say, well, look, they got 1,000 here. Yeah, well, it's 1,000 on the bid, 1,000 on the offer. That's just normal order flow. Really what you want is where it stands out. You know, if it was 1,000 on the bid and just 162 on the offer, that, in my opinion, would be more important. Okay. And then we just sort of hang around in between these areas, right? So there's nothing really to get too excited about. I mean, you know, we got a strong buyer that came in here right off the low of the day, but is it holding? Yeah, you know, for the most part. Again, you know, we're sort of coming into the lunchtime, but I don't see strong bids coming in really until you get over here, the 877. But more or less at this point, just sort of going sideways. So I guess, you know, sort of the point of this video is when you first see some signs of, you know, strong bids coming into the market. Well, in this case, we're talking about bids because we're at the low of the day. You want to see it acting as support, right? Because if you're going to jump in front of this bid at 30, you want to see it not just trade higher initially in that bar, but then in the subsequent bars. If you're trading below it, that's not a good sign. Chances are we'll probably go a little bit lower. Now, that's not to say that, you know, you couldn't have bought it here at, you know, what is this, 30.25, sold it out up here at 1.25, make a point. I mean, you can if that's your trading style. I think it's a little bit more effective to try and get more points. And then here, right, you got some strong offers coming in. Okay, market starts trading down. That's what you want to see. You want to see those levels hold, not really, you know, not hold like here where it's trading immediately through it in the next bar. You want at least the next bar to be moving away from it. You know, and again, you know, can you make anything out of this? Well, you know, maybe you could have got a point out of it if that, or maybe you just lost a point, because if it's not moving in the direction that you want it to move, or not say want it to move, but expect it to move, then it's just not going to be a very effective trade, right? And at some point, you got to say, it's not moving in the direction that I'm looking for it to move, right? And then that's when you cut it, because you know what? Even though, you know, eventually, because I'm not going to say, yeah, well, you know, look at this, right? It did sell off, you know, well, yeah, but in the meantime, it rallied 8 points against you, right? So that's not really an effective trade. Just as here, strong buyers come in. Okay. Next bar is going up. Okay, that's good, good. But then this bar is inside. Okay, that's not what you want to see on a market that's moving, right? If a bar goes inside, if you're looking for a market to move and then it just goes inside on you, that's probably not going to go the direction that you want. For me, that's one of the signs of a trade that's not going to necessarily work out. Okay, so you got to look for these signs. You have signs. And for me, if a bar goes inside, that's not a good sign. That's not an encouraging sign, right? You want it to start moving away. Okay, here, it goes inside of this bar, right? That's not what you like to see. You want to see a nice clear break up or down. So anyway, guys, that's going to wrap up today's video on sort of, you know, recognizing the strong volume coming in and whether or not it's going to be effective to actually take a trade off of. All right. Oh, one thing I just wanted to touch on really quick. This is the heat map. Okay. You can see here, well, 600 came in here at 27. It's market's going to the moon. No, because if you know, because guys that like heat maps, you know, they'll say, well, you see how, you know, there's strong bids coming in here. Oh, 400, 600, and the market took off. Okay. Well, earlier, right, and then this is, you know, things like a sweep, right? You can't see it, right? Let's just open this up here because it happens so fast. It's not going to show up as liquidity. So this was that low, right? The sweep came in. Where was it? In this bar here, I believe. Yeah, at 30, right? Do you see, you know, big volumes? I mean, it's 367 here. It's 284, right? Even if you just go back one bar. I mean, at 30, it was 223. Again, it came in on the bid side, so you're not seeing it sort of pop in there as liquidity because somebody just bought everything up through it and worked a bid here at 30. Okay, then when you got up to what was it, 35? Okay, Do you see anything up here at 35? Where's 35? Here, 211. Okay, but we know about 2,500 contracts traded, right? So it's an iceberg order. 236 still showing. So obviously, whoever's doing it is probably showing, 100 or 150, right? Okay, 295. Oh, there's a big offer there. There's what these guys will say. Look at that. Look at this. 285. Okay, fine. To me, that's not considered really big. We get through it. Okay, right? Trade on the other side of it, and then come right back down. So when you're dealing with, sort of market sweeps or big supportive buying or resistant selling, right? Supply, it doesn't necessarily show up in the market depth because of where it's coming in. If it's coming in on the bid side, you're not going to see it in the liquidity because this liquidity is showing you what's away from the market, right? Either below the market or above the market. What you want to be watching is the inside market, sort of, what's trading on the bid and the offer, or more importantly, what traded on the bid or the offer. Now, that's not to say that, a heat map isn't useful. There's uses for it. I mean, sometimes you're going to see like orders at a level that just sitting there waiting to be picked off, especially in the night session. And to be honest, I've seen Bookmap. I don't use it, but I've seen it, and it looks pretty neat. They've got some great features on it. Maybe one day, I'll, if I have the time, I'll spend some more time looking at it. But again, that's just a different way of trading. But if you're looking for volume coming in on the bid or volume coming in on the offer, when the market is trading right there, it's not going to show up as resting liquidity because it's current liquidity that's coming in, right? And it's coming in very fast. It's coming in through a sweep right here, through several points, coming in right here as the market jumps from 8.25 to 30 1/4. Why? Because a big order just came into the market. All right, guys, so that's going to wrap up this video on sort of big liquidity coming in on the current bid or the current offer. So I hope you find this video helpful. Some of what I talk about, hopefully you find it helpful and useful for your trading and understanding of order flow. So let me know what you'd like me to discuss next by leaving a comment down below. And if you enjoyed this video and my other videos, make sure you hit that like button and subscribe to my channel so you don't miss any more of my upcoming content. All right, everyone, have a great day, and I'll catch you guys on the next video. Bye-bye.